Hello, everybody. Good afternoon. You're very welcome to our event today, which is Personal Insolvency. Does Europe need harmonized rules? My name is Alison Burns, and I'm the press officer here at Finance Watch, and I will be moderating today's discussion. And so before I hand over to Peter Norwood for his opening remarks, I just want to make a few housekeeping points. So firstly, we are going to be using Slidos to take audience questions today. So for those in the room, you will find QR codes on your seats. And for those joining us online, you should be able to also scan the QR code. I have my iPad here with me, and so I'll be monitoring this throughout the event and integrating your questions as we go. The second housekeeping point for today is that this event is being recorded. So without further ado, I'm going to hand over to Peter for his opening remarks.
Thank you very much, Alison. Thank you very much, everyone, for attending this event today on this very important topic. My name is Peter Norwood, for those of you who do not know me. I'm a research and advocacy officer at Finance Watch. We are a nonprofit organization based in Brussels with over 100 members from 20 countries. Our mission of Finance Watch is to make finance serve society, and as part of this mission, one of the priority issues we focus on is over-indebtedness in the EU, which is why, amongst others, we have worked very closely on the issue that we're discussing today, personal insolvency, and published a report on the topic in 2022. Now, over-indebtedness is a serious problem in the EU that already existed before the COVID-19 pandemic and the current cost of living crisis, but is set to get worse and has gotten worse as a result of these crises. Over-indebtedness carries considerable costs, not just for the indebted who are directly impacted by it, but it also carries considerable economic and social costs for countries as a whole. Studies show that over-indebtedness negatively impacts the mental and physical health and the work productivity of the indebted, which in turn increases the demand and costs on countries' healthcare and social welfare systems, and leads to an overall drop in countries' economic output. Our Finance Watch report from last year showed that in Sweden, for example, the potential annual cost of over-indebtedness is as high as 36.6 billion euros. The cost of living crisis has eroded the disposable income of consumers and therefore made it harder for citizens with debts to repay their loans and mortgages. EU households have been facing high inflation, far outpacing wage growth, and inflation impacting essential goods such as food and energy, hitting vulnerable households the most. In addition, households have been facing rising interest rates, making it harder to repay mortgages in a number of member states where there are a high number of mortgages with variable interest rates. In this context, it is more important than ever that effective, accessible, and fair debt relief measures are in place to help struggling borrowers and address the growing over-indebtedness problem. However, currently many struggling European households do not have access to fair and accessible personal insolvency schemes to provide them with this much-needed debt relief. Personal insolvency rules are not harmonized at the EU level, resulting in a patchwork of different national insolvency schemes in the 27 EU member states. The Finance Watch report on personal insolvency found that most of these national schemes have high barriers to access them and fail to provide consumers with a true fresh start. Common access barriers identified include, for example, high debtor-paid insolvency proceedings costs, and the need to have accumulated a certain amount of debt to be eligible for the scheme. Therefore, we believe that there is a need for an EU harmonized personal insolvency scheme which incorporates best practices. A recent paper of the Financial Services User Group, FSUG, an expert group of the EU Commission on Financial Services User Policy, has drawn similar conclusions to the Finance Watch report. In view of the urgency of this topic, as we approach EU elections, we urge EU policymakers to put this issue high on their agenda and to tackle it at the start of the new EU legislative mandate. Thank you very much for your attention, and again, thank you for attending our event here today. I look forward to the upcoming discussion, and now hand back over to Alison to kick things off.
Once again, thanks everybody for coming. Thanks, Peter, for the opening remarks. So I'm very eager to introduce all the panelists here beside me and really dive into the debate for today. But before I get the conversation started, I'd like to do just a small bit of jargon busting. So first, over-indebtedness. What is it that we're talking about here today? So Peter gave us a great introduction into the severity of the problem and also the societal costs associated with it. But how do we actually define over-indebtedness? What is it? So interestingly, there is no universally accepted definition of over-indebtedness. And if you ask different EU countries for their definition of this problem, you might get slightly different answers. So for the sake of today's discussion, and to start everyone off on the same page, I'm going to start with the following definition from a report by Civic Consulting in 2013. So here it goes. Households are considered over-indebted if they are having, on an ongoing basis, difficulties meeting or are falling behind with their commitments, whether these relate to servicing secured or unsecured borrowing, or to payment of rent, utility, or other household bills. This may be indicated by, for example, credit arrears, credit defaults, utility or rent arrears, or the use of administrative procedures such as consumer insolvency proceedings. So there you go. And then this leads me nicely into the second term that I kind of want to jargon bust today, which is personal insolvency. So personal insolvency or consumer insolvency are umbrella terms for debt relief mechanisms that can be activated when an individual is unable to repay their debts. So when we're discussing over-indebtedness in Europe, we can kind of divide the solutions into two main camps, if you will. Rules that intend to prevent people from falling into the trap of over-indebtedness, and rules that can help people recover from over-indebtedness and start afresh. So examples of the ex-ante solutions in Europe include things like the Mortgage Credit Directive or the Consumer Credit Directive, and work has been done and is being done to improve these ex-ante solutions at European level. And we'll hear, I think, a little bit more from these from our panelists a little bit later. But what about ex-post solutions? So what happens if people find themselves in a situation of over-indebtedness? Here, I think it's fair to say that it's a bit more of a grey area, right? EU countries offer different levels of support to the over-indebted in their society, and in a lot of cases, there are significant problems with the debt relief mechanisms that are on offer. And so this really goes to the heart of the panel discussion that we're going to have today. What can and should be done at EU level to help those struggling under the weight of over-indebtedness to get a true fresh start? And so it's on that note that I'd really like to introduce our panelists for today's discussion. So I'm really delighted to be joined by Daniela Van Don, so full professor of banking and finance and dean of the Milano School of Management at the University of Milan. We have Vasiliki Ietru, a fourth-year PhD researcher at the European University Institute, whose research focuses on the intersection between prudential, financial regulation and private laws, including consumer protection and insolvency laws. We have Elena Brolis, who leads the financial services team of the Consumer Policy Unit of DG Just at the European Commission, and is in charge of the Consumer Credit Directive and the Distance Marketing of Financial Services Directive also. And then last but by no means least, we have Monica Kalu, the co-founder of Consumers United in Romania, and is also an individual member of Finance Watch. So very welcome to all of you. And also one thing that our panelists and Peter all have in common is that they are all kind of working as part of or working with the Financial Services User Group, as Peter mentioned, an expert group of the European Commission focusing on financial services user policy. So there you go, very welcome. And so now I'd really like to dive into the heart of this discussion. And so to start off, I'd really like to explore the scale of the over-indebtedness problem in the European Union. And so Daniela, I want to go to you first. What is the current situation across Europe when it comes to over-indebtedness?
Thank you. And good afternoon to everybody. The situation is getting worse and worse, especially in the last few years, because, as mentioned by Peter, because of increasing consumer prices, interest rates, and a consequent reduction in disposable income. Before coming, I collected few indicators on the burden and financial fragility from the ECB and Eurostat. As you said before, over-indebtedness is a multidimensional phenomenon, and therefore it's impossible to quantify the dimension of over-indebtedness with just one indicator, but all of the ratios are going in the direction of an increasing size of over-indebtedness. So indicators like the debt service to income ratio or the debt to asset ratio that are related to people that are already that are bearing some debt, whether it is mortgages or consumer credit, are rising. And the same as for arrears with mortgages, consumer credit, or with rent or utility bills. So different types of financial burden, not necessarily banking debt. And in this case, again, the ratios are rising. So, for example, there is an increase in the number of people that is unable to face unexpected expenses. In Europe is 1 out of 3 on average, but then the variation across countries is huge, and therefore there are countries like Romania, Greece, Bulgaria, where it's almost 1 out of 2, which is pretty lot. And the same is for difficulties in making ends meet, and so on. What is happening now? As said, consumer prices are rising. The inflation rate was at 10% in July 2022, and it's still around 5% nowadays. And the increase in inflation rate has two main consequences as far as the topic we are talking about is concerned. The first consequence is a strong increase in interest rates, and this affects mainly indebted households and mainly low-income indebted households. And the second issue, which has affect everybody, is increase a reduction in disposable income. And the reduction in disposable income is particularly stressful for low-income people, because in this case almost 70% of their income is used for basic needs or for housing, and therefore an increase in 10% of consumer prices has a strong impact, of course, in terms of distress. So the situation is quite worrisome, and it's going to be worse in the next few years. And I think that Elena will say something later about that because of this very interesting study from the European Commission.
Okay, thank you, Daniela. You mentioned Romania there. So I actually would like to move on to Monica. So what, like, it's great to have you here because you can kind of give us that flavor of what's happening in the ground in Romania. What's the situation when it comes to over-indebtedness?
First of all, thank you for inviting me. And regarding the situation in Romania, what I can tell you is, of course, we are deeply affected by all these events, unforeseen events, like COVID crisis, then the war in Ukraine, and the energy prices situation. And of course, the population was deeply affected by this increase in cost of living. We have, I think, the second low wage in European Union. And for this reason, the vast majority of population actually don't manage to face the cost of living. We had an inflation started to rise during the COVID crisis. I think in 2021 it was 5.2%. Then it was a peak in 2022 of 13.8 inflation per year, and now it's slowing down at 8.8%. In October was the last report. But we are not so optimistic regarding this. And fortunately, we have a personal insolvency scheme in Romania. It is a law which was made in 2015 but entered in force in the beginning of 2018. It was necessary to fill in a legislative void because previously we had a personal insolvency legislation only for juridical entities. And unfortunately, even if we have this law, it was for a long time not functional because we didn't have all the structure with the insolvency commissions. And to create this structure and to train the personnel, it was a challenge. And after that, unfortunately, the law has some problems in.
Okay, thanks for
Yeah,
that. Maybe
and
we'll come
yeah,
back to the
exactly.
problems, will we,
Yeah.
in a few minutes?
Later,
Yeah,
later I will
exactly.
tell about these problems. And of course, it is absolutely necessary now to talk about these personal insolvency schemes and procedures in the European Union, because at some point I think it will be a very useful tool for the European consumers and of course for Romanians, because we are in this unpleasant situation, and where probably more than half of population don't have an emergency fund, or they don't face an unforeseen expenditure. So
Yeah,
it
thank
is
you. Yeah.
exactly the time to speak about this.
Exactly. Thank you for that, and thank you for sharing a little bit about the situation in Romania. So now we've kind of touched on, yeah, the current situation in the EU, current situation in Romania as an example. Now I would like to turn to Elena. Looking ahead, how do you see this situation evolving as we go forward?
Thank you, and good afternoon, everybody. As it was just mentioned, we published a study which is from June 2023, which updates the civic study you were mentioning from 10 years ago on over-indebtedness. And the study looks at the current situation, so there is a mapping of the current situation, but also it's very interesting because it looks at consumer perception. So there is a survey of consumers to look into the impact of over-indebtedness on them. And then also there is a legal analysis of the current framework. You were mentioning rules to prevent over-indebtedness. So it's an interesting study. I invite you to look at it. And there is a sort of there is a scenario. So there is a modeling to estimate over-indebtedness in the coming years. So we heard from Daniela that now the situation is worsening, but it's true that until 2020, over-indebtedness was decreasing since the great financial crisis in 2008. So in 2020, 8.8 of European consumers were in arrears on payments. And yet, as it is a multifaceted phenomenon, here we are looking at one element, which is arrears on payment on utility bills, rent, mortgage, or consumer credit. But then we see now that with this scenario, in 10 years, roughly, 11.3% of European consumer or EU consumers would be over-indebted, which brings us back to at least 2015, 2016. So a situation where many more people are in difficulty. Of course, as it was mentioned, there are big differences between member states. So if in this scenario, which is based on projections, based on publicly available data, but also an expert survey, so some estimations, around half of households in Greece would be in difficulty, or 1/3 of households in Bulgaria, while actually now we see it's a bit more than 1/3 in Greece and 1 in 4 in Bulgaria. Other countries like Luxembourg, Sweden, or the Netherlands would not have such a big problem. Then, again, looking at this scenario, of course, the driving forces behind this increase would be the, as it was actually mentioned, the expected increase in the cost of living, a decrease in income, increase in demand of credit, which we see in some countries, not everywhere. We participated recently to an event, and someone from SEPS who's here today explained that in different parts of Europe, the increase in demand of credit is different, but then also increase in cost of debts. And then, interestingly, it would impact some socio-demographic groups which are not the most impacted now. So if we look at the groups most impacted now, we look at low-income households. As it was said, of course, it's more dramatic for them because they don't have this buffer that higher income households have. Unemployed households, single parents, and households with a basic level of education. But in the future, it will we will see that women will be more impacted. Households living in the city, so in urban areas, but also younger people, because actually now it's more the middle-aged which are more impacted by over-indebtedness. And then, as it was mentioned, of course, this cause it has a big impact on people in terms of pain, stress, depression. And the study also mentions that debt advice, which is something we are very attached to in DG Justice, is a useful and effective tool to try to help these people in difficulty.
Okay, thank you very much. From there, I'd like to kind of go on to the next question. So we've kind of covered what the situation is in Europe, how, you know, the problems that are kind of there, the trends that we're seeing. But what is currently being done to address this growing problem? So I'd like to stick with Elena for this one and ask you, what work has already been done at the EU level to make the situation better? What's happened?
A lot has happened, and I'm very happy to share this with you, since we've just concluded the review of the Consumer Credit Directive, for example. But a lot is happening as well. There is the colleagues are working also on the Mortgage Credit Directive to check whether current rules are still good enough. And other colleagues are working on other pieces of legislation. Of course, we also have non-legislative measures because, as I said, we're working on over-indebtedness for many years. So if we look at, so you made a difference between prevention and then remedy to over-indebtedness. If we look at the prevention side, we have measures concerning consumer credit since 1986. Of course, the Consumer Credit Directive, which now has been revised, dates from 2008. So if you think about the legislative process before the financial crisis, actually. And it ensures that there is a high level of consumer protection, specifically through information provision and adequate explanations to consumers, but also to ensure that default of payment is avoided by assessing the creditworthiness of the consumer before the credit is granted. So, and this was confirmed by the Court of Justice. One of the aim, or the main aim, or one of the main aims of the Consumer Credit Directive is to protect consumers against the risk of over-indebtedness and insolvency. And so that's why we also speak about responsible lending, and there are recitals about it in the directive. Then in 2014, we had the Mortgage Credit Directive, the cousin of the Consumer Credit Directive, which complemented existing rules focusing on mortgages. And it reproduced some elements of the Consumer Credit Directive, but also went beyond and introduced stricter rules, for example, on creditworthiness assessment, but also added new elements on, for example, conduct of business obligation for staff knowledge requirements. Interestingly, the Mortgage Credit Directive also introduced a measure, provision, to ensure that member states would encourage creditors to exercise reasonable forbearance before foreclosure proceedings are initiated. This is interesting because somehow we are going a bit into the remedy side, because we are looking at a situation where the consumer is already in payment difficulty. Building on that, the NPL directive also introduced a provision to, it literally built on that provision, going a bit beyond, requiring member states to ensure that creditors have adequate policies and processes in place to actually exercise this reasonable forbearance. And then the new CCD, and when I speak about reasonable forbearance measures, it's either refinancing the credit or modifying the terms and conditions of the contract, for example, the duration of the contract, or changing the type of the contract or the interest rate, of course. But in the new Consumer Credit Directive, we go a bit beyond co-legislators decided to make sure that where appropriate, so not in all cases, there is still an assessment, but where it is appropriate, creditors actually have to apply forbearance measures, so modify the terms and conditions of the agreement. And also the new Consumer Credit Directive introduces an article on debt advice. So I said we are really attached to that. We consider it's a very effective tool to ensure that consumers in financial difficulties can repay their debt in a sustainable way, maintaining a decent level of life, their dignity, but also, of course, creditors can recover their debt, which is important, of course. And this is looking a bit at the remedy part. So I would say it's not only prevention at legislative level, at EU level we are dealing with, but also the remedy side. And then on top of that, there are non-legislative initiatives, there are these studies we mentioned, there are several projects on debt advice. So we are very active on that, and that's the existing framework.
Thank you very much. So now I would like to hand over to Vasiliki. So we've kind of heard of where we're at now. We've heard Mortgage Credit Directive, we've heard Consumer Credit Directive, we've heard that there is kind of part of a remedy in there as well. But is this enough? What are the gaps? Are there gaps there? What needs to be addressed?
Thank you everyone for having me here, first of all. We've heard about the ex-ante measures in the MCD and the CCD, and it's great that they are there to prevent over-indebtedness. But if we see at the numbers published by the central bank recently, there's no new business going on currently. So these measures, although they are great that they are put into the routine of banking, of financial institutions, this obligation to evaluate the creditworthiness of people, these are not going to save us in the current situation where, as you would see, if you see at the numbers, there are no new business coming in. It's consumers use existing existing instruments that they have in their possession in order to pay their everyday needs, and even use, for example, draft accounts in order to pay for their mortgages, for example. So we need an ex-post response to the current situation. Not to mention that the MCD and the CCD, they are sector-specific, so they talk about financial products, but not for other obligations that consumers have that are more that are more necessary. For example, taxes, bills, electricity, water. So there are people that their risk of over-indebtedness is on their basic needs. So we need an instrument that goes beyond the banking sector, and we need an instrument that is also ex post, not just ex ante. Then it wasn't mentioned, but there is some provision in the restructuring directive which addresses business insolvency to be extended to consumer credit as well, to consumer indebtedness, insolvency. But this instrument is at the discretion to the member states whether to extend it or not, first of all. It does not address issues that are specific to consumers. For example, the access barriers, you've already talked about it briefly. This is one of the main issues that there might be insolvency schemes out there, but they are not accessible to consumers. They don't address issues like the dignity of consumers, consumers that they don't have assets and they don't have income. So we need a specific tool for consumers, not just the business insolvency scheme to be extended to consumers. And finally, another moving more to the responses at the national level, just briefly, and their interaction with the EU. I mean, recently, after the financial crisis, many countries introduced insolvency schemes because of the recommendations made by the European Commission in the cycle of the European semester, or because they are part of adjustment programs, economic adjustment programs. But these measures also address the fiscal part. So their goal is to maximize debt recovery instead of providing a true fresh start for the over-indebted. So we need a specific tool for consumers that its purpose is to provide a fresh start, not maximize debt recovery.
Thank you. Very interesting. Elena, would you like to come on back on any of the points that has just been mentioned there, maybe?
No, it's very interesting. It's true that what we are focusing on with the Consumer Credit Directive and Mortgage Credit Directive are two types of debts. It's also true that we've seen during the energy crisis that countries adopted several measures to try to relieve the situation for consumers and try to help consumers. So I think the issue always with acting, like deciding to have an initiative at EU level, it's whether or not it's the best place to take action. And it's very difficult. I mean, it's very difficult to prove the case because, of course, we have member states, we have a parliament, we have I think in general this discussion is very interesting. But if we need to consider having harmonized rules at EU level, much more reflection is needed on that. Okay. And that's why it's great to have this event today. But I mean, I think we should also, you mentioned also that current rules are not enough, but we just revised also the Consumer Credit Directive, which means that new rules will basically be implemented in 3 years. So we will see then. And also the NPL directive was also recently adopted and has been transposed now. So there are also more recent developments that need to be to still be measured because they didn't really, the impact is not there yet.
Okay, thank you for that. Now, I'd like to go back to the Romanian example for a second. Now, earlier, Monica, you mentioned Romania does have a personal insolvency scheme in place, but that there are problems with that current one. Could you kind of elaborate a little bit more? What's the gap in terms of, ex post as we're talking about relief measures?
Indeed, it was very good, or it is very good that we have this personal insolvency scheme, which practically is used since 2018. Unfortunately, there are some situations where the legislation didn't manage to cover the debtors which are in the position to be eligible for this personal insolvency scheme, like having debts for more than 90 days and for more than 15 monthly minimum wages, totalizing. Unfortunately, the legislation, for instance, forgot to tell the situation of cross-border issues, and we have a very large number of Romanians working abroad, making credits where they work, and coming back in Romania and being executed in the country where the credit was originated, for instance, or the same being debtors in Romania and leaving the country and not paying anymore the debts because they didn't manage to gain enough in their new jobs, and now they are in the situation to be executed in Romania. And this situation, for instance, was not properly covered by the legislation, or a situation that was revealed by the COVID crisis, for instance, when a provision of the law said that is not entitled to make use of the proceeding by the debtor, which lost the job for reasons which were imputable to him or her. So during the COVID crisis, there were persons that practically were so afraid to work that they were dismissed, but it was a psychological reason, for they didn't want it to work. And if they would challenge in court this decision of dismissal, they will lose practically a few years until they can turn in their favor the decision of the dismissal. So in these years, they will be executed for their debts, and not having the right to make use of this personal insolvency scheme, for instance, because the legislation don't allow them this, because the legislation having a center, and it is correct this way to have in center the good faith debtor, but this good faith debtor somehow should be scrutinized by a court, for instance, if it was a good faith debtor or not. And there are also provisions in the legislation that it is not entitled to make use of procedure someone who don't make enough or reasonable efforts to find living mean. But what means reasonable efforts? This was not detailed by the law, and it is a barrier for those who are entitled, and until someone tells yes, this person made reasonable efforts, this situation was practically in a gray area. And many other weak points of legislation was are not covered in this moment. So unfortunately, this is the reason for what we don't see so many proceedings.
So you would say, yeah, great that they have the personal insolvency scheme in place in Romania, but there are a few gaps there that people are like, let's say, we can learn from as we're kind of going through this, and kind of we can learn from those when we're designing something else, potentially something at EU level, for example. But I would like to just maybe move to one of our other panelists. What other kind of member states are we seeing with personal insolvency schemes? Are there any examples there that we can kind of look at? Maybe Daniela, do you have any insights on that?
Oh, well, actually, there are so many different schemes related to personal insolvency in Europe that it's really difficult to find out which is the best unless a deep study on the characteristics of personal schemes and best practices and so on. And the reason why there are so different schemes in Europe is that actually personal insolvency schemes sometimes goes back really to the past. I mean, this is not always in all the countries, but personal insolvency schemes are in somehow related to the way the culture of a country, the moral situation, the society, the way the society built up relates to the issue of the so-called in Latin pacta sunt servanda. So you have a debt, you have to repay this debt. And this attitude is different in different countries around Europe. So there are countries where there is an attitude that is more positive in terms of debt relief and in terms of well, this is a situation, you are now over indebted and we have to solve this situation because this is better for your life, the quality of your life, and it's also better for the society as a whole from an economic point of view. And there are also countries where actually the idea of debt and the idea related to the fact that you are not going to pay back your debt is more, it's more difficult to face, and therefore it's more difficult in those countries to set up something that is closer to a fresh restart or that is closer to debt write-off. So there are differences that are strongly related to the way each country creates its culture over time. And this is why it's going to be tough at EU level to find out just an harmonized personal insolvency schemes because it has to, the harmonization process is going to be hard and because you have to find out minimum requirements that can be acceptable for everybody. And I think that this is the issue. Having said that, of course, it's so important having ex post and ex ante instruments in order to tackle over-indebtedness that I think at EU level everything has to be done in order to provide this kind of solution. And we all know that is even not enough because as Elena and also Vasiliki mentioned before, over-indebtedness is something that goes beyond. It's related to the welfare state in each country. It's related to the labor characteristic of the market, the protection of wages, the protection of working poor. And so far, this belongs to each single member state. Is it correct? Are things going to change in the future? Maybe at EU level something is going to change and there will be in somehow the possibility to make all member states going in the same direction as far as social welfare and market labor and all those stuff is involved. We will see.
Okay, Basiliki, I see you picking up the mic.
I mean, I agree that this is a patchwork, that there is a patchwork in Europe. So each member state has developed its own system. But at the other side, there are good news in regards to that most states do have a personal insolvency scheme, so are not starting from zero. After the recent financial crisis, there have been reforms, so we are moving towards the same direction in a way. There is this notion of fresh start popping in different member states. So again, there is some conversion, but at the same time, there have been similar problems throughout Europe. So problems regarding to accessibility, the requirement to good faith, as Monica has mentioned, the amount of debt that you should accumulate in order to be able to access these frameworks. In certain cases, you're just too poor to be able to access these frameworks, either because of the cost or because there is a minimum amount guaranteed that should be repaid to the creditors. So different problems around Europe, but the same principles. So we have problems in accessibility and problems in providing a true fresh start. So despite the picture that it's accurately described by Daniela, I would say that there is the fertile ground to build on that and resolve these issues that they are quite common around Europe.
Okay, very interesting. And we have a question from the audience, two questions, in fact. Could you mention how many individuals and families benefit from personal insolvency in Romania? So, one for Monica. And then this audience member is also wondering about statistics from other member states. Would anybody have any statistics to share on that?
No, unfortunately. But this is why I think it's very important at this stage to do more research on that, and that's also what was mentioned in the beginning by Peter and you, that the financial services user group which is an expert group of the Commission representing financial services users, is now keen on having more research. So in the paper, it's also mentioned on that, not only on the framework but also possibly on the magnitude of the problem, because this is also something we need to prove to have action at EU level. And that's really what we need to look at. Vasiliki, for example, explained that the Restructuring and Insolvency Directive allows, in Article 1.4, member states to apply discharge of debt rules, which are now provided for entrepreneurs, also to consumers. Something the Commission is now doing is assessing the transposition of that directive and looking at also how many member states used this option. So in that, I think we need to have a clearer picture of what the problem is, how member states are addressing it, whether or not it is effective, because of course, I mean, we've heard a lot of problems, and then what can be done considering the differences in culture and in the perception of debt. I have been recently told by a colleague, but I don't know if it's true, that in German, for example, the word of the root of the word debt, it's the same as for shame, no?
Ah.
Yeah. Yeah, fault, yeah. So you see that, and then maybe in Scandinavian country or in Ireland, I don't know, it's just the procedure for debt discharge is very quick, it's 1 year. So we really need to have a clearer picture, I think, of the problem as well.
If I may add on this, because I do agree with what Elena said. I mean, I think that a study on this would be really important, because there are countries where there is, like in Italy, there is a personal insolvency scheme, quite a recent one, because it's 10 years old. And apparently it has all the characteristics in order to work properly, but then actually we don't know anything about the effectiveness, and we do feel that actually it's not effective. It's not really effective. Why? It's a matter of culture, it's a matter of the judicial system, it's a matter of the, I don't know, institutional arrangements. It's quite relevant, because in this case, if you go deep inside the countries and you truly understand the level of accessibility or the level of effectiveness, then you can really build up something, an harmonized instrument that can pick up the best practices, and also try to solve problems that maybe comes from the past, or are different to solve.
Yeah. And Monica, do you have anything for Romania there?
Yeah, indeed, regarding the Romania, there are procedures which are in front of Insolvency Commission, and others that are in court. For the proceedings started in front of the Insolvency Commissions, I found in the reports of the National Authority for Consumer Protection, which is the entity hosting these commissions, that there are hundreds, I think more than 800 cases where these commissions gave advice. But these reports don't give data regarding finished proceedings.
Okay.
So this is one problem, the lack of information. And for those in court, I know that there are a few. Again, it should be followed case by case to see which was finished. But there are not many. If we compare the situation of poverty and payment difficulty, we know that many households are. There are far too low to say that the legislation reached the goal
Okay.
of protecting debtors.
Interesting. We have another really good audience question here. US is one country, but every state has its personal insolvency rules. How do you see common solvency rules to be achieved in the EU where differences are bigger? Would anybody, maybe Vasiliki, would you like to kind of come in this? Like, how would it be achieved in the EU? What do we need for a personal insolvency EU-wide framework?
Evidently, there are differences, and maybe you should be looking for minimum harmonization measures so to accommodate these differences. But at the same time, as I said, even though there are differences, there are also a lot of similarities in regards to the problems that they arise in different member states. And these are the problems that need to be addressed at EU level.
Exactly. And so do you have any idea of like what the features of such a scheme should look like given those commonalities? Like what should it really have as part of it?
I mean, we should definitely be looking at removing all the barriers to access the personal insolvency schemes. So the good faith, for example, requirement mentioned by Monica before, this is so arbitrary, and it's been one of the reasons that many people are denied access to these kind of schemes throughout Europe. Or because at the end of the day they failed these kind of plans because it can be challenged afterwards. The cost, the amount that needs to be covered, to be accumulated, the amount of debt that needs to be accumulated in order to access these insolvency schemes, these have to be addressed. Then, in regards to actually providing a fresh start, because it's different. You should easily access these services and you should easily exit these kind of services. So it needs to be 3 years maximum, like the restructuring directive provides for the businesses. It shouldn't be extended. It should cover most debts. So we should limit the amount of debts that can't be excluded from this kind of plans. And there should be a provision for no income, no asset consumers. So if it's evident that these people have very few income, they don't have enough assets, there is no reason to extend and drag this process for ages. We should bring them back into work and be productive members of our society as soon as possible. So these are some of the issues that really need to be addressed. And then, I mean, we've already talked about the ex-ante measures, but there is no real remedy for consumers that these ex-ante provisions have never been, met by financial institutions. So we can link that to the personal insolvency scheme. It's not just about the moral hazard of consumers going through this process, it's also about the moral hazard of financial institutions providing this kind of products without meeting their obligations. So a link between the two, you cannot only look at half of the picture. So just.
And I think, oh yeah, go ahead, Monica.
Actually, I would like to add two points. It is, I think, useful for debtors if in these personal insolvency schemes from various member states, if the terms should be equalized. Like the length of how old are the debts, for instance, when the procedure starts. And also, I like it will be useful a recognition of court decision. So, if you are declared that you are protected by a personal insolvency scheme in a country, in a member state, this to be available in other country where you have debts, to be protected also there, because now you may have assets in various member states, and in a country you should be liquidated, and in other country to be protected. by a scheme. And I think that should be harmonized.
Thank you, Monica. I think we've covered a lot of ground here today, and so I'm going to kind of wrap things up now. And so the title of this event today is indeed Personal Insolvency. Does Europe need harmonized rules? So my question for each of the panelists now, maybe starting with Elena and moving our way down, is after what we've discussed, does Europe need harmonized rules?
I think we don't know yet. So this is the time to continue to look into the issue, gather data, make sure that, based also on the current legal framework and recently adopted rules, also follow the evolution of the implementation of these rules. And focusing on that first, because we know that these recent rules needs to be transposed. Also, I mentioned forbearance measures. This is also pretty recent. So look at the situation now, the magnitude of the problem, see if, considering subsidiarity, proportionality, all these, I mean, you spoke about jargon. This is clearly EU jargon, but I think, unfortunately, we are familiar with it. If there is a case for having harmonized rules, if actually the fact that, as was mentioned, most countries have rules on personal insolvency in place is not enough, and then see if we actually need harmonized rules.
I think we have to, EU has to try to go to that direction, so has to try to set up an harmonized scheme, but we cannot underestimate problems. I mean, while Vasiliki was speaking, I was just taking note of 3 problems that came to my mind. There are some barriers that are represented by stigma, and stigma is difficult to overcome because, again, it's related to the culture of a country. There are some problems related to the judicial system. Some of them are historically low in some countries, and so defining a time frame may be difficult because of several differences in countries. And then there is a problem that is related to black economy. In some countries there are no black economy at all, in others there is black economy, and this impacts the trust that people can have in those kind of remedies. So I do agree with Vasiliki when she's saying those are the minimum common stuff that we need to have, but I cannot underestimate the problems because I think that this is going to be a long path.
Monica.
Indeed, it is a big challenge to harmonize the personal insolvency schemes across European Union. We have to think that we have so many jurisdictions, and not all of us use the same system. So not everywhere we are having legislation based on Roman law. Other are having other systems, and at least I think we should have some common principles and define these common principles. And the same, I think we should establish some threshold to be available across European Union to establish when a debtor is in the risk of default. And what is most important to be harmonized is to have easy to use procedure in each country. Never mind if it will have a procedure harmonized at the European Union, at least to be very easy to be used, not in terms to default easily, but to save the viable households.
Thanks, Monica. And ending with you, Vasiliki.
I mean, the door has already been open at EU level. We've been talking for a long time about the need to tackle over-indebtedness. We've been talking in the context of the MCD and the CCD, and we've talked in the context of the restructuring directive of the need to provide a fresh start. We cannot talk about tackling over-indebtedness and providing a fresh start without also looking at the personal insolvency issue. We have talked about it, now it's time for action. And the reason we need to do it now is because and I'm going to borrow a title from the Financial Times, we are sitting on a on a personal debt ticking bomb. It's accumulating, and we need to act now. Thank you.
Thank you very much. And so I'm going to end it there. A very big thank you to all our speakers for coming here in person today as well. Some have traveled far. Thank you very much for that. And it has been a real pleasure to hear your perspectives on this really important topic. So thank you for coming. And then thank you to everybody who has attended both online and in person. I wish you a lovely evening and thank you for joining us.